Let's get started with the presentation, shall we? 3 at 3 is where I identify what myself, my brother Pete, and our team have found as unusual option activities. Now, we define this as options that are trading on the offer. We don't care about options that are sold. Options are a leveraged play, of course. They give you a substantial amount of leverage, sometimes as much as 50 to 1, sometimes even more. And they let you participate in some of the big expensive stocks like Apple and Amazon for that matter, with a lot less money on the line. So it's one of the reasons we really endorse the product. They also let you define your risk. But with all that said, let's get started. Market Rebellion is the company that Pete and I founded. It is a company where we provide subscriptions for various services. We also have education, mentoring, and coaching available on that website. You can find out about what I'm about to do here now at marketrebellion.com/UOA. That's marketrebellion.com/UOA for unusual option activity. And if you're just getting started, you could just type that instead. marketrebellion.com/get started. All right, my disclaimer is, as every day, that this is for educational and informational purposes only. Macy's. This was a nice trade from yesterday, I think. I talked about it on the halftime report, made it my final trade. Not often that you get a multi-billion-dollar shopping center that all of a sudden makes a dramatic move, but this one clearly did. Now, was some of it because things cooled off a little bit in America as far as the looting and so forth? Perhaps, because a lot of the Macy's flagship store was damaged severely over the weekend, but that's not the only reason. There could be some pretty nice drivers setting up for this one as America reopens. Nonetheless, we talked about this one and said, hey, stock's $6.41, and they're buying the July 7 call. So an out-of-the-money call against a stock that's trading $6.41. So roughly 60 cents out of the money. And they paid 62 cents, which is $62. Now, how did that work out? Well, pretty well, you might say, because here it is. The stock is not $6.41, it's $7.91. So it's a full $1.50 higher, which is a big jump for the stock. Love it. And the options are doing pretty well as well. If you look at the left side of your screen, those are those July 7s that I talked about. They're presently trading for about $1.40. That's the bid, in fact. $1.45 is the offer. Now, if you own them from 62, where I own them, I have already sold half, 50%. 50%. Why? Discipline. I'm taking some of the money off the table right now. Whenever an option doubles 2x, I take off half the money. Let the rest run. So for the sake of argument, let's say I have a little over 100 contracts here. So that means I took 50 contracts off the table, put it in my pocket. And not here at $1.45, but more like $1.30 is where I got out. Of half, still in half. What did I decide to do against the rest? Well, the right side of your screen is the July 9 calls. I sold those against the remaining calls. So what does that mean? That means that I own the right to take it from somebody at $7, and I've given somebody else the right. I have an obligation to deliver shares to them at $9 if they ask for it, all the way up until the third week in July. So this means that for half the money off the table in my pocket, the other half, I basically have no risk. Why, you might ask? Because I collected 55 cents, all I could lose here is 7 cents on the other half. On the other hand, with the stock, even just right where it is today, let's call it $8. These calls that I'm long would be worth $1 or $100 in option speak, $100 per option. And these, the right to take it from me at $9, I wish they would, but at $8, that would be worthless. So granted, these have more time. This hasn't expired yet and all that, but this is what's known as trading into a call vertical spread. I own it, have the right to take it at 7, and I've given somebody else the right to take it from me at 9. And basically, I have paid 7 cents for something that could go to $2. Or, if you want to look at it the way I look at it, I've paid $7 for something that could go to $200. How's the return on that looking? Is that looking like better than 50 to 1? Well, again, miss a little, miss a lot. This was a great trade. It's working out nice. Bang! Let's move on to the other. Quick update on Capital One. Capital One I talked about when it was $7.58. And I identified it yesterday on the halftime report with Scott Wapner and the team. So I said, these July 80 calls, $2.20. I bought those. Now, where'd the stock go today? Well, let's see. Banks and tanks. Tanks a lot. He's referring, of course, my friend Tony Dwyer, when I say tanks, he's referring to like the big heavy equipment manufacturers like Caterpillar, like Lockheed Martin, like Raytheon, like John Deere, and so forth. So when I'm saying tanks, it's like a pun, of course. I'm saying thanks. Stock's up $3 because where was it? $7.51. Now it's pushing over $74. Been over $75 today. Bang! Took some off already in this one as well. Now let's get to some fresh meat. The first of our 3 at 3. Widely decried as just garbage is L Brands. Why? Well, because they have those brands like Pink and Victoria's Secret. And I think they have Bath and Body Works too. But anyway, L Brands, the reason I show you the last 4 trades in here is that the last 4 of these guys have been dead on. So when they were buying it, when the stock was $12.50, they were buying at the money calls and they cashed out big. That was on the 28th of April. And then 22nd of May, they were buying end of May expiration calls with the stock at $15. Then, just last week, they were buying the 1750 calls with the stock at $16.69. Then, today, with the stock another almost $2 higher, they're buying the September 19 calls. So, what should you glean from this? That we like to follow the smart money, which we define as those big trades that occur on the offer. This certainly fits that bill pretty well. Also, this trader has been right and right and right. And until the trader's wrong, I'm going to keep following. So watch this one. And since these are a little more expensive options, I hedged them. I sold an option against it when I established the trade, much like I legged into with that Macy's trade at the top of this show, 3 at 3. All right, here's the stock. There you see as it's moved up from basically $11 all the way up here now to $18.32. Bang! Second trade of our 3 at 3. TripAdvisor. So, as I always like to do, I wanted to find several things here for you. One, obviously, travel stock, TripAdvisor. They talk about great hotels and things to do when you're on vacation, which we might all start doing, believe it or not. Yes! And they also get a little spiff from handing us off to various travel agencies as well as some of the hotels and airfares and all the rest that might be involved. So TripAdvisor, TRIP, stock's $22 a share, 22. They're buying the 22 calls in June that expire in 2 weeks and 2 days because these options don't expire this coming Friday. They expire in 2 weeks and 2 days. They're regular June expiration. They bought at the money calls, which means that they're going to get about a 2 to 1 performance out of these. And they paid $1.25. Now, if you move that decimal place 2 to the right, you'll know that $1.25, since every option's for 100 shares of stock, is $125. So they paid $125 for these options at the money for 2 weeks to go. Now, let's look at where the stock is. Is it still at 22? It's a little bit higher, 22.35. So it's been moving up throughout our session today. And as you see there, we're near the highs of the session. And so these options are intrinsically, that means in the money, by 35 cents. Why would that be, John? That would be because the right to buy the stock at 22 is worth 35 cents in the money when the stock is trading 22.35. The rest of it is extrinsic value. That's part of that 2 weeks that it's got to trade. Some volatility built in there as well. You have to factor in what would it cost to buy the stock and sell these. You'd have to hedge by buying the put, all that kind of stuff. So these are already working in our favor. And I continue to hold them. I will probably hold them until probably Tuesday or Wednesday of expiration, which would be about 2 weeks from right now today. And since I paid $1.45-ish, I think I paid $1.40 and $1.45 for these because my piggish subscribers raced in ahead of me and they got it ahead of me. So that's fine. They're good people. And what we do is we post them up and then we trade them. So sometimes I'm not getting in at that low price. I'm getting in at the higher price. Nonetheless, if these options were to trade to, like, say, 75 cents or so, I would exit. Why? Because I'm going to cut my losses and move on to the next trade. Just as you saw me pulling money off the table in Macy's, that's discipline on the profit side. I also want to be disciplined on the exit when the trade is not working side. So if this doesn't work out, I'll exit between 75 and 80 cents because that would be cutting my loss at about 50%. That's how I do it. You got to decide how you want to do it. Last trade of our 3 at 3 on Semiconductor. Pete cited this. Nearly 9,000 of these June 19 calls bought for 37 cents all the way up to 60 cents. Semiconductors. Yeah, I like it. Well, 9,000 of these, so 9,000 times 6, $60, means that this is a pretty big trade, folks. It's over $500,000 on a single trade. That's pretty big. I want to follow this guy or gal and see if they're right. And if they are, I'll just keep riding with them and profiting. If they're wrong, I'll cut my loss at, you got it, 50%. So in other words, if I paid 50 cents, which I think is around what I paid in here, I would cut my loss at 25 cents rather than seeing that go all the way to zero if it doesn't work. Keep an eye on that. On Semiconductor was 1830. Now it's 1890. It's already 60 cents in our favor. Bang. So, by the way, let me see. Where are those trading right now? Just to give you guys a really quick little update. Do I have time to do that? Yeah, I do. Let's see. On ON Semiconductor, and these are, again, June 19 calls. So these are 2 weeks and 2 days as well. And they're paying for these June 19s. They paid 60 cents, and now those are trading for 90 cents. So we've already made 50% on our money. 50% is not where I take my profits. I take my profits at 100%, and hopefully we get there quickly. Hey, folks, that's it. You want to learn more about how we do it? Go to marketrebellion.com/UOA, and you can see all about it. And again, we can teach you how to trade stocks, options, futures, cryptocurrencies. We've also got coaches. And when you sign up for any of those products, you can participate in our online webinars and things for free. We don't upsell those. Those are for free. You could also, as I say, have a coach, have a mentor. that would help you individually, much like a private instructor, if that's what you so desire. Got a bunch of them, and they're all great traders. I am Jon Najarian. I hope you join us again tomorrow for 3 at 3. And I hope you have a great day. I'll see you for workout video tomorrow morning. Enjoy yourself.